Hello and welcome. It's that time of the year again. As they say, if it's the beginning of the year, it has to be the moment to forecast what's going to happen this year. But more than that, it's that time of the year to listen to and to understand the one and only Ruchir Sharma, author, columnist and global investor. He has only about $50 billion under him, which he invests in emerging markets. It was $25 billion last year, 50 billion, 40, something around that. It doesn't matter. But his record has been amazing in investments, and his books have been top of the New York bestseller list, and as a columnist for the Wall Street Journal and now the New York Times in particular. So during this show, let me warn you, absorb what Ruchir has to say about the trends for India and for the world, trends that are ahead in 2018. I warn you, if you do what Ruchir says, you may be richer by a few billion, some currency, by the end of this year. So pay attention. Of course, all at your own risk. I always do what he says. This year, we're going to do something slightly different though, Ruchir. We are going to start by looking back and to see just how good were your forecasts last year. That's a bit unfair. That was done in January 2017. But we'll spend just 3 minutes. Won't go into too much detail. That'll expose too much, I think. But let's just look at the top 10 trends of 2017 that you said and how they actually turned out, starting with the first one. The first one you said was, Trump shakes the world and India too. I mean, he's certainly shaken me up. I've never seen a more ridiculous president in my life. I used to have faith in, I was going to say you Americans, but you still are Indian passport. But America, his Twitter has, is it only his Twitter that's shaken the world, or has he actually done anything?
My honest assessment about this is that he has ended up being much more irrelevant than we had thought at the beginning of 2017. Right. There was a lot of fear about what exactly he would do, and there was some excitement which we referred to in terms of what he would do with tax cuts, the corporate tax cut.
Which happened.
Exactly, but that happened really late in the year, by December. So if you really look at the year as a whole of 2017, I think the big story was how much Trump didn't matter and how much the checks and balances in the US democracy came to the fore, and how little got done in terms of actual legislation and action compared to all the noise and sound and fury we heard for much of the year. So that for me really was more about the fact that he shook the world a lot less than I and many people expected at the beginning of 2017.
And we can also say, thank goodness.
Right.
Yeah. Okay, let's have a look at your second top 10 trends in 2017. Deglobalization. Outsourcing, you said, is dead.
Right. Well, I think that that's something which is a multi-year process. I think that
and it happened in quite a
exactly.
So it began in quite
so we saw some basic trade revival last year because global growth picked up, but it was nothing as explosive as what we have seen in the past. In the past, whenever global growth would pick up, we'd see that global flows in terms of trade, migration, or even in terms of capital flows would pick up by multiple times the pick up in global growth. That just didn't happen. So I still feel that we are in a long phase of deglobalization on the classic metrics of the transfer of goods and services, capital flows, migration, all those. I think this is a multi-year holding period at best, if not a decline. And certainly that period of hyper-globalization that we saw in the 80s and 90s and much of last decade has come to an end.
So deglobalization and a tremendous slowdown in outsourcing started strong in 2017.
Yes, I think it started before that. But I'd say that in terms of 2017, that trend, I think we can say, has kept going and is possibly likely to get worse, I think, in the years ahead.
It happened bigly, as Trump would say.
Right.
You also said the third trend in the top 10 was that 7% growth would be harder than ever before for India to achieve.
Right. So I think that here I was right, but possibly for the wrong reason.
For once?
Which is the fact that once again, sort of, every year, at the beginning of the year, all the Indian economists forecast that the Indian economy will grow at above 8%. That is a standard forecast if you look back for the last few years, really. And once again, the Indian economy grew well below 7% for the calendar year, if you really look at it, for 2017. We don't have the final data, but roughly it will be that, even if we trust the new methodology that the CSO uses, which I've always had doubts about. But I think that the bigger point here is that the global economy last year did a lot better than many of us were expecting, and yet India did not participate in that global growth revival. So if India did not participate last year when the global economy had its best year in a very long time, then it's very difficult for me to imagine that India will be able to achieve 7% plus growth on a sustained basis anytime in the foreseeable future.
You know, I think when you said 7% growth for India will be tough, a lot of people said, no, he's being pessimistic, that's not fair. But you have turned out to be spot on that, like all your...
Yeah, right, so far.
So far, right. I think actually, Masa, it's very brave of you to go through these top 10. Most people will say, look, you know... Okay,
let's move on.
Okay, then you said that the anti-incumbency, that means governments being thrown out or not being voted back in, that revolt against government, it will intensify, you said, in 2017.
Yes, I think we saw that. You know, if you look at most of the major elections across the world, from France to Germany to other European countries in terms of what happens to in Latin America, you saw that the incumbents did very poorly in the elections. Even in places like Germany, where Merkel was able to win another term, the vote share declined, or she's still struggling to find a new coalition. And in many other countries, from South Korea to France, the incumbents lost very badly.
Even the UK.
Yes. So this is a terrible time to be an incumbent, which is that the vote shares to retain your popularity in this environment is extremely difficult, given the sort of media attention, the social media attacks, and the general frustration with what leaders are able to deliver. So I think that this global tendency to throw the bums out as the default option is something which really played itself out in 2017 as well. And as we'll talk today further in the show, that the popularity ratings of leaders today is at an all-time low across the world.
Yeah. So it's like they're all irrelevant, bit like what we used to say in the 60s. You guys just imitate us, your generation, nothing original. Okay, your fifth top trend out of the 10 was there'd be a declining faith in democracy. The growing faith in authoritarianism, that'll be on the rise.
Yeah. Once again, I think that it's sort of played itself out, that if you look at it across the world, I mean, you have you still have a lot of strongmen who are rising, this declining faith in democracy. The best data we have available on this is the Pew survey, which sort of looks at this, and that showed a similar increase in its latest findings, which came out, I think it was in October of 2017. So I think that this declining faith in democracy, and even in capitalism in places such as the United States, is something which is there, that the younger people are the ones who are really feeling most disenchanted with what the leaders are delivering, and so there's a tendency to sort of be against the status quo, and the status quo has been democracy over the last few years.
Anything but what we've got right now. So authoritarianism is becoming
there's increased there's an increased appeal of that, even if it's not delivering, but there's an increased appeal for that.
And your number 6 was pretty closely connected with this. You said that there'll be growing nationalism across the world, and one reflection of that will be more defense spending.
Right. Yeah, so I think that we have seen that the data reflects that. So if you look at the United States and Europe, for the first time in many, many years, these countries saw an increase in their defense spending. For years, they've been cutting back on their defense spending. But now that trend has reversed. So defense spending has begun to go up in many countries across the world, led by these Western countries, which for a long time sort of believe in the peace dividend and how you cut back on defense and you spend on other things. But now defense spending has begun to go up, even in many countries in Europe, which have been quite reluctant to do that.
And we know that in places like trend,
and we know in places like Japan and all, they want to change their entire policy on this, the constitution, to try and get more defense spending increase. And if some countries in Saudi Arabia and the Middle East, where defense spending is simply exploding. So I think that yeah, this trend is really playing itself out and played itself out in
It
2017.
could get worse this year because Trump's button is bigger than others, according to him, right?
Right. I mean, as I said, that in US and Europe, for the first time in many years, we're seeing an increase now in defense spending, which is what we saw in 2017.
Right. Your seventh top trend for 2017, which you said this time last year, was cracks in the tech space. There will be markdowns, down rounds, and shutdowns, even in India.
Right. Well, I don't think this quite played out in terms of the way that I was expecting it, because really it was a bumpy year for tech last year, although I was saying something a bit different here, which is more sort of for the venture capital, private equity kind of space. But really, if you look at it, 2017, tech was the defining trend of 2017. So this didn't quite play out in terms of, but it was really about big tech.
Wouldn't you say there was quite a lot of disruption, and a lot of that happened at the smaller tech firms?
Yeah.
It's the big ones that...
Yeah, I mean, just got bigger, and that's something that we'll speak about here, which, like it's almost to an unsustainable degree. But really, I think that tech was the defining trend of 2017 in many ways.
So partially right at the bulk of the lower levels, but not at the top 5, 10 tech companies.
That's right.
Number 8 was that Europe would make a comeback. It'd be a potential surprise. Europe, everybody said, is he mad? Europe making a comeback, it's over.
Well, this was undoubtedly the most contrarian call to make at the beginning of 2017, because there were a series of elections scheduled in Europe, a lot of fear about the far right rising in Europe and what that would do to business confidence. And Europe had been doing so poorly over the last few years and been the source of so many crises that you thought that 2017 would be another year of some problems in Europe because of elections, and economic growth was very disappointing. And yet, the place where economic growth surprised maximum to the upside was Europe. At the beginning of the year, just to put this in context, the consensus forecast among economists was that Europe would grow at about just over 1%. That was the consensus forecast among economists. Europe today is growing at a pace of nearly 3%. Now, this is like huge. That's a huge change in terms of what's happened in Europe, and something we'll again speak about much more as to why this may have further legs to run. But really, this was the single biggest surprise that played itself out last year.
Actually, if you get these sort of things right, you could score enough marks, you could even get into St. Stephen's College.
That's being charitable.
Okay, number 9. China's debt bomb will still be ticking.
Right. I think that, this is one of those things, which is that China's debt once again went up last year. So China's debt as a share of GDP didn't go up that much, but the total debt went up last year. And China's debt now as a share of its economy is at 260% or so. That's what the estimate is. This is the highest for any developing country in history. But the only thing is that it really hasn't had any serious consequences of the kind that we would have expected, which is that China's debt keeps going up, and they seem to have an endless runway for increasing this debt without facing the consequences. Any other country which would have increased its debt so substantially over such a short span of time, we would have expected a blow up or something to happen. Now, whereas we didn't expect a blow up, I did think that that Chinese growth needs to slow down, and yet it just continues to keep growing at a pace of above 6%, which is very, very unusual for an economy of that size.
Still, there is that tension that something is going to blow up in China. But when it's going to happen, it just goes on and on managing.
Yeah, so I think that, but it's partly because of the fact that there are two Chinas which are emerging. There's a new China, which is all the tech companies and all the innovation taking place. And then which has no debt, by the way. So that's, really doing well. And then there's the old China, which is controlled by the government, the state-owned enterprises with record levels of debt. And that's still not doing well. But so it's really this dichotomy in China, which is there, and how they're able to operate so independently of each other without the old China dragging the new China down. That's been the surprise. But if you really look at long-term capital flows and money, the Chinese, you can make out there's a sense of fragility that you have in both China and outside. And one key indicator of that, which I've written about, is that very few people hold their money in the Chinese currency, the RMB. So very, very few people trust that currency, and they still flock to the dollar, because there's still this sort of nagging worry that will China really be able to keep this going for many years?
I'm enjoying going through these 10 because it gives me I think all of us, an understanding of what happened last year, which is like different from the rest. And
Right.
it's fascinating. And the 10th one, which you gave, which I don't know if it was good news or bad news for us, less sports, more news. In other words, I love sports, and we're in news channel we have.
Right.
So, but news has done very well this year.
Extremely well. So I think that in terms of if you look at, and this is being driven a lot by Trump, but general interest in political affairs is extremely high. So, of course, in America, we have all this data, which in terms of the TRP ratings and other things, and it shows that for a non-election year, that for a non-election year, the ratings are very, very high, and the readership of the New York Times and other things is really sort of powering ahead, exploding in terms of what's happening to digital subscriptions. So this is something which the interest in news is extremely high across the world, a lot driven by personalities such as Trump, and sports viewership, at least in places such as the United States, we know, whether it's got to do with their football and other things, is really suffering. So I think that this trend is still playing itself out, and the interest in news, and I suspect in India too, in 2018 as well, given the fact that now we are running into this incredible election season, that we'll see incredible interest in news in India as well.
Well, in India, politics is sports, news is sports,
right.
and,
and entertainment, right?
So based on last year's performance, I would have given you 88.75%.
That's being very charitable.
However, because you got the last one right and it's so relevant to us, I'll raise that to 93.2%.
Yeah, well, I think that
you can study history at St. Stephen's.
It was, some sort of wise man who once said that making predictions is very difficult, especially about the future. And so I think that even a 50% hit rate, I would take it. But still, that's very charitable.
Now let's just move on to what's going to come this year, because we all want to make a lot of money on this, what you say. Thank God we didn't follow you last year at our own risk. Okay, so let's have a look at your first forecast or trend for 2018. This is what you're saying is going to happen. Global growth will peak. In other words, put it simply, it'll hit a high point after which it'll trail off a bit.
Yes.
And if we look at some of the data behind why you're saying that, why will global growth peak in 2018? Let's have a look at some of the factors. Look at this. 2012, 2.5%. And if we just go quickly through what has been over the last 5-7 years, really 2017 has been a standout year, 3.2, and 2018 might just go a little bit above it, but to sustain that, you're saying, is unlikely.
Yes, because I really feel that there's some very fundamental reasons behind this. So first, put this in context, that this is the best year that the global economy has had on many metrics, from growth to inflation to the number of economies which did well last year, since the global financial crisis ended. It was a great year. And some of that momentum is spilling over into this year. But I don't think this momentum is likely to last. And the main reason for that has to do with the sort of next slide that we have here.
Your other data then explains why this could be a peak.
Yeah.
Well, first of all, most interesting I found in your data is that the post-war years, if we look at the next slide, were an amazing period. Like if you're looking over since
last
1
few
AD,
centuries,
looking over 2,000 years. From 1 AD to 1700 AD, we were growing at 0.15% a year, the global growth rate. Then 1700 to 1900, 1.1. 1900 to 1950, just after the war, 1.9. And then 1950 to 2008, you point out, it went up to 3.9. That's the highest ever. And then 2012 to 2017, it started petering out a little and going down to 2.7%. And why did that happen? You explain it through this fascinating graph. The supply of workers, that means the workforce, started going down. There was a post-war boom, the baby boomers of the post-war period, and that provided a lot of workers for industry, and you had huge growth. And look at your decline that you're showing since around 2007. how it's just sharply going down to among the lowest ever. So the supply of workers is really, really declining.
Yeah, so I think that the point here is that there are two drivers of economic growth, which is that you have the increase in the number of workers and also the increase in productivity.
Right.
And I think that what people sort of really underappreciate is that incredible surge we got in global growth from 1950 till the global financial crisis.
Right.
A lot of that had to do with the fact that there was a surge in the world's population growth rate.
Yes.
And
so even if productivity improved only a little bit because you had so much more workforce coming in, the combination of the two made a GDP growth rate much higher.
Yes, because we had other periods in history when productivity did very well, like in the Industrial Revolution of the 19th century. But never before did you have such a big demographic surge in the world. And that has come to an end, which is that the population growth rates of the world have begun to decline.
Amazing decline you showed, yes.
Yes, and in fact there are about 40 countries in the world today where the working age population is shrinking.
Negative,
right?
my God.
Negative, including
Wow.
China. So this is the really big change which has happened in the global marketplace, and something which
So
I
they're
think people
regretting their one-child policy.
yeah, and they've turned around on it. So we've gone from sort of, having all these policies about population control to now many countries trying to encourage people to have more babies. So we've seen this huge shift which has taken place.
One of the, so our failure in controlling our population is one of the best things we ever did, one good failure. But what is interesting that you also show is that unemployment.
Right.
If we have a look at how that has fallen, the unemployment levels in the world are at near record lows now. That means there's hardly any unemployment. A lot of people say, unemployment going up like it is in India. It's a global phenomenon, but not what your data shows.
No, I mean, this is not my, this is like a complete
I mean,
myth.
what your analysis shows.
We love to use that sort of stuff here. This is a global trend because of automation, robots, artificial intelligence, all these factors. We like to think that that's the reason why in India we have had sort of jobless growth over the last few years. At least that's the impression created.
Right.
But that's just such a myth, because look at what's happening globally. So in the developed markets, the unemployment rate is at a 40-year low. And the graph I have here is the global unemployment rate, which has been done by JP Morgan.
Right.
And that shows basically that the unemployment rate today is the lowest that it's been since they really started keeping a record of this. In terms of it's back to the levels that we first saw in 2000 or nearly there. So the fact of the matter is that there are jobs everywhere in terms of as far as the global workplace is concerned. Now, wages aren't going up that much as yet, and there are many reasons for that, from the demographic shift and the change in the number of jobs being, or the kind of jobs being created. But the bottom line here is that India really sticks out like a sore thumb here, which is across the world, the global unemployment rate is about as low as we have seen it in recent times.
Right.
And in India, we haven't been able to participate in this global jobs boom because of our own policies.
Right. Let's move on to the second one, and I love the title you've got for it. It's all about Europe. Boom shaka laka. If you could just play the song a bit, maybe you could do a jig to it. Boom shaka laka in Europe. That means it's even better than you had said last year. You against the tide, you said Europe would do well, and you're saying instead of 1%, they grew about 3% last year, and it's going to carry on this year. Just have a look at why this is, and some more analysis by Ruchir, because Europe has somehow rediscovered internally an optimism. Europeans want Europe, they want the EU, but look at that business confidence index. It shot up in 2017, and you feel this will continue in 2018. And the data also shows that Europeans, instead of wanting to break away into small nations, they want to be part of Europe, part of the EU, very different from England, although I must say Brexit happened with just a 2% margin.
Right.
But look at that, Germany, the percentage who want to be in EU are favorable, has gone up. France, it's gone up. Poland, it's gone up. Spain, it's gone up. Only Italy, they're still a little worried about Europe, because Italians are way better than anybody
But
in
the key
Europe.
thing here is, that so the question asked here was that the number of respondents who have a favorable impression of the European Union.
Yeah.
There's not a single country in Europe where that number is below 50%. And that's very interesting.
Okay, even if its trend is different, but
Yeah,
on an
even like in
yeah.
Italy, it is
Yes.
above 50%.
Yes,
but more
yes.
interestingly, in every country in 2017 compared to 2016, they wanted more European integration, which is that the impression of EU actually improved.
Right.
So there is this outside picture, which is sort of, that this is a sort of continent destined to break up into smaller groupings and other things. But really, I think that within Europe, the impressions are very positive. And because economic growth is also doing well now, more and more countries are likely to have a favorable impression of the European Union. Now, the big risk remains Italy, even for 2018, because they have elections this year, and there is always a sort of risk that in Italy, some far-right movement comes to power and they want to sort of break out of the European Union. But on balance, I think that the risks towards Europe have receded and possibly will continue to recede because, as I said, global growth is set to peak this year because many countries are running at close to full employment, such as the United States, Japan, are close to full employment. But there are many parts of Europe where there's still a lot of slack, where there's the unemployment rate is still quite high.
So in some ways, Europe is doing a catch-up. But it's still, if it's growing at 3%, that is a huge turnaround.
Huge turnaround. I mean, 3% for, is the current growth rate. The entire growth rate for last year was close to 2.5%. But still 3% is the current,
and you expect that to continue.
And I think that could run for a while. Just because, as you say, that they have ample scope to catch up because they suffered so much by having 2 recessions within the space of 6 to 7 years.
They made that change fast and nobody saw that.
Yeah, and so one thing very interesting that they did, and this is a lesson for India too, which is that the big thing that Europe did to engineer this turnaround is that in many countries fixed their banking system. That the banking system was at the heart of Europe's troubles, as is the case after a big boom and you have a lot of bad loans on the balance sheets. And India has really dithered on this a lot in terms of fixing its banking system. Had we fixed our banking system a few years ago or in time, we also would have been in a better shape to grow today and participate. But in Europe, all the countries, including Italy, have done a lot to fix their banking system.
Right, that's a huge change, and as you say, at the core.
Yes.
Now, the next one is really interesting because it goes against a lot of what traditional thought is. So top trend number 3 is good economics may not be good politics.
Right.
And now you come to this conclusion by analyzing globally as well as in India. So stock markets are going up, which is an indication that that's good economics. But leaders, at the same time as the stock market goes up, you think their popularity would go up, but globally, stock market leaders' approval ratings have declined quite sharply.
Right.
And what about India? If you look at your data on India, it shows that may not meet good politics here either. Anti-incumbency, we always thought build a few roads and you'll counter that, but no. Overall anti-incumbency is 66%. In other words, 66% of governments are thrown out.
Yes, at both the state and the national level. So we looked at the data going back to 1980. And we got nearly 200 instances of elections which were held in 20 of India's largest states.
Right.
And of that, it's an amazing sort of conclusion, which is that 2/3 of governments typically lose their election.
So when a government goes for an election, it's got a 2/3 chance of losing and only a 1/3 chance of coming.
Exactly. So therefore, I've always felt that in India, elections are lost, not won. We keep sort of looking at who's going to be the next stuff, but often elections in India are lost and not won. But to me, this has been the sort of really sort of striking conclusion of the studies we did over the last few months, which is that even in the states where economic growth improved over a 5-year period compared to the previous 5-year period, the probability...
Where their growth rate improved.
Yes, meaning
so you think, things are going well, they're going to be voted back in, but
60% of those governments too lost their re-election.
That's almost the average. So like 60%, you do well and you still get thrown out.
Right. And and the even more striking conclusion to me was that even states which delivered economic growth of more than 8% over a 5-year time horizon, which is like really, even there, just over 50% of governments lost their re-election bid. So like to me, this is really striking that there are many factors which go into an Indian election, but just delivering high economic growth is not enough to try and
Ruchir,
and win
I'm
re-election.
really shocked at the messages you give to our politicians.
No, but I think
basically
that-
say, don't build roads, don't do this. Just go in for, nationalism, casteism, religion, much better, right? Is that what you're saying?
I'm not saying that. All I'm trying to say is that
If you want
it's
to
very
win
interesting that...
Can you do another graph of how many do that and win?
Right. In terms of that...
99%?
What I find is that here almost the world is going the Indian way, which is that if you look at it in much of the world, if you would deliver very high economic growth, particularly like in the US or many of the Western countries, you would typically get re-elected. But last year, I've really been struck by this, which is that even though we have seen a pretty pronounced economic revival across the world, the popularity ratings of leaders, as that graph showed, is at an all-time low.
That was an average of popularity of all world leaders,
exactly.
major world leaders.
Exactly. We were able to sort of look at about 20 odd democracies in the
and
world for which we could find
is going down.
The average, the popularity has gone down. And in fact, the honeymoon effect has shrunk, which is the fact that if you look at all the new leaders which got elected over the last couple of years, almost all of them today have a negative approval rating.
And normally honeymoon means shortly after elections, you shoot up for at least maybe a year, depending on how long the honeymoon is. That hasn't happened.
Right from Australia to Canada, you look at the approval ratings of the incumbents in office, and in all those places, the approval ratings are quite low. So the average approval rating of these leaders across the world today is at the lowest since we've been able to get the data going back the last 10, 15 years or so, even though stock markets have done well and the economy has done well. So even across the Western world, we're seeing this connection break down. And in India, of course, over a long period of time, we have this sort of conclusion that even if you deliver very high economic growth, you're far from assured of winning re-election. And more often than not, elections are lost in India.
I just hope no politicians are listening to this. Ruchir, we take a short break. When we come back, we look at the other 7 more trends, especially the next one, which fascinates me, where he says everything is a bubble. Join us in a few minutes from now, a few moments from now. Welcome back to Ruchir Sharma's take on what's going to happen in 2018, a forecast. I think he preferred to call it trends. And we will test you again next year as to whether you got it right, whether you score 92.5 this time again. Let's look at your 4th out of the 10th trend. And it fascinated me because the title alone, The Everything Bubble. And what you what your analysis portrays is that there have been various kinds of bubbles over the years. This is a big financial bubble. In 1980, the financial assets value was about the same as GDP.
Across the world.
Like 100%, it was like value of GDP and the value of financial assets were about the same. Now, in 2017, financial assets value is 3.5 times global GDP. That is a massive change. And I think while we were discussing it, you used the phrase, it looks as though the tail could wag the dog now. It's not the real economy that's going to affect the financial economy. It could be very much the other way around.
Right, and this is just stocks and bonds, by the way. The global value of stocks and bonds.
Stocks and bonds is 3.5 times the value of global GDP.
Exactly, and like this is my fear, which is that we always thought that markets reflect economic reality.
Yes.
But now when markets become so big, and if something goes wrong with the markets, that could come back to bite the real economy. I think that for me is the big fear now.
Yeah, it is a big worry, and it's so different from the earlier years. If you look at Ruchir's analysis of what the earlier bubbles were like, there's something very different from what we're seeing now. Number one, in 2000, where interest rates were moderate, not low, there was a stock market. That's in 2000, that great tech bubble, and actually a bubble generally. Then in 2007, interest rates were lower. They were lower than they were in 2000, and you had a housing bubble, and that burst, and we know the terrible consequences. And now in 2018, there's an everything bubble. There's a financial bubble, a housing bubble, a fine art bubble, a good wine bubble, a Bitcoin bubble. Everything's in a bizarre state.
Yeah.
Now, when you say a bubble, it makes us all nervous.
No, I think that what I mean here is in terms of valuations, that if you look at all the valuations of these financial assets, for many of them, they have never been this high, or at least never been this high in a synchronous manner, which is that at some point in time, there's always some bubble being formed, because that's the nature of human beings, which is that they go crazy after some asset class every decade.
Right.
But I think that what we're seeing now is that the valuation of almost every asset across the world is very expensive. And I think that this, for me, is obviously problematic, because this is all, I think, being caused by very low interest rates. So when you have low interest rates, people just think that they have to take on more risk, and so they've gone ahead and sort of bid up assets of everything that they can get their hand to. And the latest one there has to do with Bitcoin. So in fact, and they're getting faster and faster. I think there's a lot of analysis done on this, that it typically takes many years for a bubble to build. But Bitcoin has gone parabolic, or really gone straight up in a very short span of time. There's one little sort of data which sort of reflects that at the beginning of this decade, it took about 10,000 Bitcoins to buy 2 pizzas. Today, those same 10,000 Bitcoins are worth $150 million. So I think that's the explosion we've seen.
If you had sacrificed 2 pizzas there, you could be worth $150 million if you had bought Bitcoins then.
Exactly. So I think that's really been the explosion in this. But this is what happens. We have too much liquidity, too much money sloshing around the global system. It keeps finding its way in different places. So
but now it's just finding its way everywhere. Everything is in a bubble.
Yeah, fine art in terms of what the prices are for the latest sort of marquee art. I mean, it's up 5-7 times over the last 5 years. So this is really what's going on across the world now.
Right. And given all this impending doom or worries, it's been a remarkably calm year. The next, your trend number 5 is absolutely fascinating. That it's been a year of peak calm in the stock markets. Peak calm meaning there's not been volatility, there's not been major corrections, despite all these huge bubbles. And if we look at the data which Ruchir has unearthed over the last year, there's an unusual calm in the US stock market. Historic volatility, the average correction in any year, whether it went up or down, the average correction would be 10%. And what happened this year? Let's have a look. 2017, it's been smooth. Maximum correction has been just 3%. That's 1/3 the historic volatility. And Ruchir, interesting that same thing happened in India. Despite, again, all the uncertainty and worries here, India's markets have also been unusually calm. India's historic volatility, or the average correction here over many years, how many years have you taken?
Well, in fact, 30 years.
30 years.
Since we had data for,
is 18%. That's almost double what America's, but 18%. And this year, smooth. 4% is the maximum correction.
Yeah. So in fact, in India's case, we found that never has there been a year in the 30 years that we looked at data for India when the average correction in the Indian stock market has been this low. So this is really something which is extreme. That yes, there have been years where the stock market has done even better than it did in 2017, where the returns have been much greater. But
it hasn't been smooth.
It hasn't been in such a straight line where the average correction has been so low.
That? Why is it happening all over the world and in India?
Right. I again feel the source of this has to do with low interest rates and a lot of liquidity. So there's a tendency that that we need to put this money to work very quickly because we're earning so little in the bank, or the tendency that the market's about to go up. So you want to be part of the momentum. So I think this buy the dip mentality is very much a global phenomenon, and it has happened everywhere from across emerging markets, across the US, across here. Never had a year like this where the volatility has been so low. In the US, there's been an odd year where this has happened. But in India's case, we've never had such a year.
But you do mention one thing in the title to this is peak calm. In other words, that 2017 was a peak. That means you don't expect this year, 2018, to be as calm as 2017.
Yeah, because I think there are a couple of factors. One, this is against the very nature of capitalism and the nature of markets, where you just have straight line movements without any volatility. So there's something, amiss when you get a year like that.
Right.
And the second thing is that interest rates across the world are now beginning to rise, which is that, and I think that typically there's a lagged impact of that, but when the cost of money gets a bit more dear, you do find that people get a bit more nervous and volatility tends to come back. So I think this is against the nature of the beast, which is what's happened.
Against the nature of human beings. But could this also be to do with a lot of algorithm in trading and in fact almost robotic and artificial intelligence in trading, but certainly algorithms?
Yes, absolutely.
And learning by doing.
Yes. So I think that a lot of what is referred to in the financial circles as quantitative investing and algo trading, I think a lot of that has played a very significant role in causing this. But I still feel that this amount of liquidity and very low interest rates has underpinned markets like never before.
Right. Fascinating that to have so much calm in such a world of uncertainty. As you say, it goes against human nature, but may not be humans that are doing it. It could be calmer and calmer. Robots don't sweat, do they? Oh, sorry. There is a robot announced today that sweats when it exercises.
Right. All very artificially.
Okay. Let's have a look at your sixth trend. Technology. Tech is as good as it gets, man. Let's have a look at what you really highlight. That tech is ruling the world. The biggest 5 companies in the world are all tech. Apple, $900 billion. Alphabet, which is Google's parent company, $750 billion. Microsoft, $675 billion. These are rounded off figures, and they change every day, of course. Amazon, $575 billion. And Facebook, $530 billion. And just these 5, how much do they add up to? $3.5 trillion. And if you look at the total Indian stock market value, all our companies, 2.3 trillion. And these 5 are worth 3.5 trillion. More than our entire stock market. And if you look at, you pointed out, this is spread to China as well. If you look at just 2 or 3 Chinese, they've joined the tech party, China. Tencent, 530 billion. I mean, just like Alibaba, 470 billion, just those two, $1 trillion. And we just repeat, entire Indian stock market is 2.3 trillion, which I only feel there's a lot of hope in India because we've got a long way to go. We've got potential.
Well, I think that we have sort of missed out on this in terms of that we've not participated in the tech boom which has happened across the world, although it's happening at a smaller level out here. But to me, this is unprecedented, which is that that if you look at the 5 largest companies in the world, by market value, they're all tech. Of the top 10 companies in the world, 7 of them are tech. And this didn't even happen in 2000, the last sort of big tech .com bubble. Because of the top 10 companies back then, 5 were tech. But now we just, so this has really been about...
dominates everything.
Yeah, exactly. Dominates everything and sort of is eating market share everywhere else. I think I just read somewhere that if you look at the Facebook and Google, just those 2 companies, I think account for 75% of online advertising in the United States. So they just are dominating like never before. So this is really the era of big tech, much more than it was even in 2000.
And big tech is doing well and the rest are struggling a little bit. As you say, if everybody else has to share 25%,
right,
it's not easy.
Yes.
Let's move on to your next one, the 7th. Again, slightly in the same trend about big being important. Big dominates like never before. We've seen big in technology. What about big everywhere? And it has made a similar impact in other spheres as well. Let's have a look at how in fact your data shows that big firms are more dominant than ever before. So size does matter. The percentage of sectors where just the top 3 companies have increased market share. In 2001 to 2007, 40% of the sectors, the top 3 increased. Now it's 65%, which means the top 3 companies are growing much more currently than they used to do in ever before. And that's true about India as well?
Yeah, so this is called the superstar economy, which is that the bigger you are, the better the odds that you'll get even bigger. Again, this sort of runs against the very grain of capitalism, which sort of argues for creative destruction, argues for more small and medium-sized businesses doing well. But instead, what we've seen is that if you have an advantage of being big, it is likely that you'll get even bigger, whereas the small will keep getting more marginalized. And this is true in India as well. So we looked at the market share data.
For the for the big companies in India. Let's just have a look at that, your data.
In various sectors. And you will find that the big in India too have gotten bigger over the years, and their market share today is very high. So this is the market share in some key segments in India of the top 3 companies.
It's amazing.
So whether it's toothpaste, shampoo, biscuits, passenger vehicles.
72% top 3 companies.
Yes, and in fact, if you look at just Maruti's market share in India, it's possibly the largest of any single company in India, in the world, any car company, in terms of what its market share is in this particular market. With, like possibly only in Korea, I think Hyundai and KIA coming together have a similar type of market share. But so this is a fascinating conclusion for me, but also something which really needs to be looked at more closely from a regulatory standpoint. And we're getting some backlash against that. But in India, also find it fascinating how the top 3 companies in every sector in India virtually have such a huge market share.
See, you follow all these things. I only follow beer. And I do know that Kingfisher has 65% of the market. And this is nothing compared to that.
Right.
Okay, let's move on to your 8th forecast, because we're coming to your conclusion, and we'll just look at how India's been functioning and whether things are getting better, getting worse. How is India moving? What's the trend in India? And if you look at it, India had started the key fundamentals. India has 3 concerns now. 3 fundamentals were doing well. And if we look at each one of them, there's been a slight turnaround, which is a bit worrying. The 3 fundamentals that we're talking about, you're talking about, number 1, trade plus, that's the current account deficit. It used to be 5% of GDP. Then it went in 2017 down to 1%, which is very encouraging. And now it's sort of back up again. The trend has bottomed out and it started worrying again. Is that mainly to do with oil?
Yes, some would like to do with oil, but the fact that our export growth has been disappointing also, I think, has been a factor behind this.
Which is worrying at a time like this, when the world is doing so well.
It's still a marginal change, so I'm not worried about it as such, but it has turned. And I think that as we'll go through the 3 metrics, the common factor that we'll find is that in early 2017 was possibly when we had the best combination in terms of our macroeconomic fundamentals. But now, one by one, they're all beginning to deteriorate at the margin, even though it's not worrying as yet, but the trend has reversed.
Big disappointment was exports. You're dead right, because the world markets are growing. Europe at 3%, America at nearly 3%.
2.5%,
2.5%, and we should have really capitalized on that. And then we had oil, fortunately, which helped. Let's have a look at the next one, the fiscal deficit or the budget deficit. That was also doing quite well. It had come down from 5 to around 3.3. And now the indications, you're saying in 2018 that 3.3 is...
Yeah, 3.2 was the estimate in terms of what the government expected for this fiscal year. And I think that by all, like in all probability, it's going to be higher. So this big improvement that we have seen in the fiscal deficit is likely to sort of reverse its course over the next year or so.
Yeah, especially now with, I guess, elections coming, and you have to be a little less... budget deficit is not the biggest campaign issue that you can go to.
I think the pressures are going to definitely increase on more rural spending, more farm loan waivers. I think we're likely to see much more of that in the coming year.
Right. And the third key fundamental that you point towards is inflation. Again, we saw a really good decline in inflation, the CPI, the Consumer Price Index, from a high of 10% in 2013 down to 2%. But even that's changing now?
Yeah, I think that we're seeing some slow build-up in inflationary pressures come through. And I think that this is where there's a lot of misunderstanding that, like in terms of the fact is that globally inflation is still very, very low. And if you look at India's inflation rankings on a global basis, we are still middle of the pack in terms of where we are. So even at 4%, India's inflation ranking is middle of the pack because globally inflation is so low. But I think that we are seeing some signs now that globally inflation is beginning to pick up. And in India too, the pickup has been more pronounced so far than what we have seen globally, but there's a slight deterioration going on in India as well. So therefore, if you look at these three key metrics, it seems the best is behind us in terms of an improvement that we saw.
Right.
Nothing worrying as yet on any of the three metrics.
There's no sharp increase in inflation. It's not to worrying levels, but just the turnaround is that improvement is no longer improving.
Yeah, the steady improvement that we saw
and
since
a lot of
2013.
people may say, oh, these are economists, they keep showing these things, but there are reflections in the real financial world. And if you look at how interest of bond yields reflect reality, and they tell you the truth, they don't lie. India's interest rates in terms of government bond yields, 10-year yields, have started going up since 2017. That is an indicator that all those figures that you showed are worrying.
Yeah.
And how does this reflect that?
Yeah, so I think if you see it, that we saw a big decline in India's long-term interest rates, which was a very good thing because it showed that the macroeconomic fundamentals were improving, the cost of borrowing for the government was going down, long-term interest rates were declining, but now we are seeing a big increase take place in bond yields. So I think that this is something which we need to keep an eye out on. But as you said, this reflects the change in India's macroeconomic backdrop.
Yeah, it's something to look out for in 2018. But now, to kind of counter that, there's some sort of heartening data you found, which is very unusual data that you've unearthed on how our big companies are doing well, the companies that are over $1 billion in value. Let's have a look at your ninth concern, our ninth trend. It's not really a concern, it's a positive. Indian companies are in fact in some ways best in class, mainly as an investor. Just let's have a look at some of this data. You're talking about companies that are in the over $1 billion in value, so that's a certain number, obviously.
Yes, in market value.
It's so about just under 200.
No, about 289 to be
289,
exact.
sorry. Under 300,
yes. Like the data as of late last year, there are just under 300 companies in India which have a market value of more than $1 billion in terms of it. And what you find here is that India has the best strike rate in terms of those companies. How many companies have consistently delivered over the last 5 years very steady earnings growth and high earnings growth of 15% or more.
15% or more earnings growth every
year on average, and more than a 15% what they call a return on equity. It's a metric of how good the quality of a company is, one of the metrics. And what you find is that the strike rate in India
is fantastic.
Is the highest in the world.
Almost double China.
Exactly. It's the highest even compared to
11%.
the United States, Japan, many countries in Europe, Germany, UK, and of course at the low end,
you
countries like Brazil.
People don't really get to see, and it really is encouraging that there are 21% of our companies that are over $1 billion, our big companies, are giving a return of over 15% a year in terms of earnings.
Yeah. So so therefore, if you really speak to a lot of seasoned investors in India, what they'll tell you is that ignore all this macro noise, ignore all this political noise which keeps coming out of Delhi. Just focus on finding these companies because the economy keeps on growing at a pace of maybe even 6 to 7%. And that's enough to allow many of these high quality companies to do well in India. So the strike rate in India for finding high quality companies is very high, the highest possibly in the world.
And in fact, you've got even more data on that, which is encouraging. These are primarily private sector companies?
Yes.
So let's have a look at a little more in depth into the same kind of returns that you're getting from these big Indian companies. Indian companies are growing fastest. They have in terms of their strike rate. These are companies that again are more than $1 billion in value and that have doubled in value over the last 5 years. And India has 51%. 51% of our companies have doubled. China 51, USA 33, UK 19, and Brazil only 5. So, I mean, we're again among the top in the world in this.
So, as I said, that the strike rate is very high. So, therefore, a lot of people think that this is a sort of, great pond to fish in because that you can find a lot of good companies in India and companies which have delivered through very different economic environments over the last 5 years or so have delivered quite well. So I think that this is very encouraging news as far as India is concerned, and especially if you're an investor in India, that if you can identify these high quality companies and just sort of stick with them for a long period of time, you do rather well in India compared to any other country. Even if the United States or China has more companies in absolute terms, the strike rate is much lower in terms of the number of companies which you can identify, because the pool there is much bigger.
This is quite important data for people who are investing and buying shares to know that our strike rate is significantly higher than other countries. And I'm really shocked at 21% compared to China's 11%. That is like
for
a
the
major
good quality
difference
companies.
For good quality companies.
And that's for the larger domestic market in China.
Right. Now, one other thing which I notice you also suffer from, and if you look at the 10th top trend, and it's a major problem with Ruchir's generation, 2018 you're going to see peak distraction. Not what you're thinking. What Ruchir actually means is smartphone addiction. That's gripping the world. Just look at the hours per day per user that they are on smartphones or mobile phones. In Brazil in 2012 it used to be 2 hours, it's now up to 4.5 hours. India used to be 2 hours in 2012, 2016 doubled to 4 hours. China 2 to 3 hours. USA 1.5 to 2.5 hours. And Germany 1.2 hours to 1. Germany, they're pretty solid. They've got better things to do than look at their phone. And this is worrying because it causes distraction, cognitive problems, all kinds of issues that are qualitative. And in fact, a lot of the data, which has actually kind of been measured, that smartphones harm relationships. Whenever there's a phone absent, I think you get a score of about 5. When the phone present, it goes down to about 3.5. So relationship quality drops just with the mere presence of smartphones. And in fact, other issues like the partner trust, that also, just the phone being present affects trust in partners. How does this affect the price of onions?
No, I think that there are some very significant implications of this. That beyond a point, too much technology gets counterproductive.
Right.
So in fact, there are some people who have argued that because of this, maybe that's why the productivity numbers haven't improved as much as we would have liked them to. Because a sort of thing that a lot of economists ask is, where is the improvement in productivity? It's not showing up in the data, despite this tech revolution which is taking place. But it may be that this tech revolution has gone to a place where it's getting to be a bit counterproductive. For example, research shows that the average owner of an iPhone looks at it 80 times a day. 80. Just pulls it out crazy. 80 times a day, which basically adds up to what, about 30,000 times or something like in a year that you look at your iPhone. And what it shows is that if you're trying to even solve a puzzle, just the presence of an iPhone in the room decreases the chance of you solving that puzzle. So I think that this is having consequences for productivity. But the good news, which I think is here, is there's increased consciousness of that. There's increased consciousness in many ways. The term that I like using a lot, which I think a lot of people are using also, is digital detox. What do you do to sort of keep the phones away as some sort of a detox and see your happiness and your productivity improve?
Buddhism.
Books on Buddhism. Books on Buddhism are sort of making their way on top of the New York Times bestseller list. So I think that these are sociological signs that this is really reaching a point where it's becoming counterproductive. All of us, I think, are trying to make an effort now on spending less time on the phone, because I think we are feeling it, that this is harming relationships, harming our productivity, and this has major consequences, I think, going ahead.
I'm just wondering, one sec. What did you say? Sorry, I missed.
This is the typical sort of
I'm sorry, I just
behavior
get back to you. I just want to have a look.
that we have at the dinner table.
Right. So, quickly, let's just recap about on your top 10 trends for this year. Let's have a look for 2018. If you could go through each one and just give us one sentence on each, just to remind us the key thing to look out for.
Right.
First, global growth to peak. It did very well in 2017, and you think this year could be as good, if not better, but it's not going to carry on like this.
No, I think that in fact at some point this year global growth is likely to roll over because many countries are at full employment, such as the United States, Germany, Japan, and I think that it is very difficult for them to grow much faster as they're running out of workers. So demographics will be a very key reason why global growth is unlikely to accelerate much from what we've seen
Especially
here.
with, you mentioned unemployment rates being so low. So where are you going to get the workers from?
Yes.
Second trend is that it's not only boom in Europe, it's boom shakalaka, right? And Europe was the big surprise to everybody but you last year. You forecasted. And it's going to carry on, you're saying?
Yeah, because I think that Europe, outside of some countries such as Germany, which have been doing well for a while now, has a lot of scope for catch-up because unemployment rates are still high. There's still a lot of sort of, pessimism about countries such as the PIGS countries, that we used to call them, Spain, Portugal, and stuff. So I think that there's still scope for those countries to catch up. So I think that some of the good times that we saw in 2017 for Europe could well roll over into 2018.
And your third trend, which is not the nicest one, I must say, of all of them, but it's absolutely true, is that good economics may not be good politics. You've seen stock markets go up, but world leaders' ratings go down. And you found that in India as well, that even if you've got good economics, 8% growth rate in a state, it doesn't really make a huge, you're not guaranteed being re-elected.
Yeah, and I think that that's true for some of the states going to the polls even this year, that if you look at Karnataka or you look at Rajasthan and these kind of states, you keep having the governments switch regardless of what sort of economic growth they end up delivering. Even during very high economic growth tenures, you've had sort of a switch. So that's my issue, that in India, basically as well, elections are lost and not won by having high economic growth rate alone.
Very interesting, actually. I just wish no politician would hear that, because at least they were trying to build roads up to now. Even that will go.
No, I'm sure that still matters, but my entire point is
that
not
everything.
That's exactly that. That's just not a decisive factor.
Okay, your fourth of the top trends you said was that we're in an everything bubble. Everything is expensive. Shares are expensive. Wine is expensive. Art is expensive. Why is that happening?
Well, because of low interest rates, that we've had such a long period of low interest rates. In fact, by some measures, we have never had such low interest rates for such an extended period of time in the history of finance. So I think that is a reason why so much money has poured into all these different asset classes, and that's a risk.
And the big implication which you mentioned was now the financial markets are 3.5 times the real world, the real GDP, and the financial world may be the tail is wagging the dog. In other words, they may be determining the future of the economy.
Yeah, like in the United States, we see that the savings rates of the average consumer is very low today, only 3%, because they have so much wealth coming from the stock market going up that they don't feel sort of that good to save that much. But the risk with that is that if you get a downturn, then they don't have that much money. And the stock market downturn, if it happens, could sort of hurt the real economy now.
The other thing that you mentioned about low interest rates, which is an amazing finding, is that the peak calm in stock markets. There's no more that great volatility, or at least there wasn't in volatility. Every day you don't have ups and downs, and you say mainly due to low interest rates. You had a very calm, as you say, the stock market may not have gone up as much as some in earlier years, but it's gone up in a smooth way.
Yeah, in the smoothest way in places like India. And to me, this is just against nature of financial markets, and so we're likely to see this change in the coming year.
Well, it's bloody good for the ticker, isn't it? No ups and downs. You can just sit back and say, not too bad. So I hope that doesn't change, but it will. It's unlikely that this will continue, except that this question of algorithms and
yeah, but this can also break down the other way, which is that they've gotten so used to buying every dip that if one day it doesn't work and it falls through the safety cracks, then you'll end up getting possibly a much larger correction.
We just don't know enough about this kind of robotic and algorithm trading.
Yes.
But it's quite widespread?
Very widespread. In fact, by some measures, about 1/3 or maybe more of total trading volume in global markets now is due to quantitative type investing.
Wow, that is huge, my gosh. Then the sixth was tech is as good as it gets. And there's something great about that. You feel wonderful that technology companies are doing so well, but you also worry that 5 companies have more than, $3.5 trillion market cap. That's more than the entire Indian stock market. And is it all getting too concentrated?
Yeah, the value of some of these companies is larger than all the European banks put together. And so it's become very skewed. So I think that when things become this skewed, I usually look for some balance to be restored. It's never been the history of development that only one sector sort of leads everything and the other sectors are such laggards. I think that some rebalancing of this is in order.
And your seventh was that big companies dominates like never before.
Right. And this is something which, like, the evidence is there, and I think this is the main reason why.
Explain that a little more in detail.
Yeah. So in terms of if you look at the market share of the top 3 companies, whether it's in US, in Europe, or in India, it has been rising in general and is very high. And I think that what we are likely to see here is that there's some sort of backlash building against this.
Yes,
that,
because you feel there's some antitrust feelings that 3 companies in each sector just increasing their share.
Right. And this is the main reason why wages haven't gone up in many places, because there's so much power with the corporations at the cost of the labor. So therefore, wages haven't gone up in many places, because when you have such oligopoly power, the companies are obviously in a much better bargaining position compared to labor. So once again, I do feel that, especially as we spoke to the first trend, that the world is running out of labor, that the balance is likely to shift here in terms of the bargaining power, but also the risk of antitrust, particularly in the tech sector, is rising every year now.
Yeah, antitrust and also the concentration of power in fewer hands. You sense there could be a backlash against that. The 8th one was India's 3 concerns, that Indian economy was doing very well until 2017. Current trade balance was coming down. Fiscal deficit was coming down, inflation was coming down, and now that's all turning a bit the other way, and that's reflected in the interest rates rising. So it's not just economists looking at figures. There is some real impact of that.
Yes, and I think hopefully this will be a natural check on the government as well, because as it gets into an election year, as it sort of is tempted into sort of spending more after the fiscal discipline that it had maintained over the last few years, I think that as it sees this reaction take place with long-term interest rates rising and the bond market sort of rising, hopefully that'll be a strong enough message that do not go too far down that path, because otherwise it will sort of hurt India's long-term growth chances.
Right, and then your penultimate one, Indian companies. That was great news, that Indian companies are best in class in terms of their strike rate for getting annual returns of more than 15% in their earnings and doubling in 5 years in value. We are better than the rest of the world.
Yeah, so we looked at all the major countries and we found the strike rate here was high. So that's what sort of keeps us always engaged with India. Like, it's so easy to get pessimistic about India when the politics isn't going right, or when the economics also begins to sort of not be that good. But just this factor that there is such a good basket of companies available in India is what always keeps you engaged with this country.
Right. And finally, peak distraction. When we took a short break, I noticed you picked up your phone and we could hardly get you back on air. I mean, your generation sets a very bad example. Peak distraction, mobile smartphones are just ruining all of us.
But I think it's, that there have been enormous benefits because of this revolution that we have seen. But like everything, a strength taken too far becomes a weakness. So I think that with this, we are beginning to see diminishing, if not declining returns for this, or negative returns in terms of how much we use the phone and how distracted we are and what costs that is incurring. So I think that...
And I think worrying in your data showed that India was about the highest in the world in terms of the number of hours a day spent looking at the phone.
Yes.
Almost the same as Brazil.
Right.
And the rest, most countries were below us.
Yes. So I think this is something which we all need to internalize, that to really think that how much of this is productive and how much of it is not. Like one very small rule that I've tried to implement at home is at meal tables, there will be no phone, just so that you have better, freer conversation rather than everybody being on their phone. I mean, you got in the US, you have all these stories where the millennials will sort of go into their room, and from the room they will basically order the food to their mother in the kitchen or in the same house as to what the food should be. It's just such a default option where you just want to use your phone to do everything, and what that does to interpersonal relationships. So I think there's a real sort of thinking about that.
Rethink,
like rethink, and therefore we're seeing a rise in books on Buddhism, and as I say, digital detox is the new yoga, which is that you want to be calm, you got to engage in more digital detox.
Right. Of course, I do also spend time, but I just watch TED Talks, and
right.
Ruchir Sharma and things like that. Ruchir, thank you very much. Again, absolutely fascinating, and I will check at the beginning of next year whether you score more than 92.5 and whether you can get into St. Stephen's or not. Thanks very much again. Thanks for watching. Follow what he says, every word of it, at your own risk.